Welcome back. And welcome back. Market Mastery, the only hour you need to spend in this market to make money, because we've done it week after week, day after day, month after month. And I get those are out of order, but we've absolutely crushed it for you. Almost every single pick is run for a significant percentage return, beating the market by a significant margin. And today we're back to do no less. We have a few interesting topics for you. Many of you have been following the CrowdStrike business. We're going to talk about how viable that thesis is, whether it is or at all anymore. We're going to talk Tesla. The chart saw a quick rebound, and there was a great opportunity for a quick scalp. And over the weekend, options and equity, if you would have bought it, 236 being the low, followed by our SPY options analysis. So you'll have two SPY trades for the week to trade options with. So we restarted last week, but we are successfully 49 out of 52 weeks of the year. We have given you 100% runner on that SPY options analysis. So all you have to do is sit here for an hour and you'll be able to make 100%. So if you have 10 grand in that trade, you made 10 grand. If you have 100, you made 100. Either way, it's 100% just to get you set up so you stop losing money, more so that you make more of it. So before we get into it here, we're going to start off this little session. I think we have to address it because I know there's a lot of people ready to hear about it. But Shay, tell me, what are we feeling right now about what's going on right now?
All right, so I've been hopping on a lot of calls today to get my inputs on CrowdStrike, and fully justified because we're in a bull market rally when there's a best of breed company, high quality growth company like this that dips 30% in a week. Is this a buying opportunity or not? That's the number one question I get. So I think you have to ask yourself holistically, like, let's do a 10,000 foot view on what happened. It's really important to understand that this wasn't a breach on one of the products. It was merely a glitch related to a product of a launch or updates. It was human error, pure stupidity. So this usually takes a couple quarters to like really sort out and phase on what happened. It was really a big mistake on their part to not have any of the quality assurance in place right now to test their definition files that interact with the Windows kernel. What do I mean by that? Think about Austin and I are on a team and responsible for keeping our computer system safe, much like a antivirus system works. So they use something called a definition file, which is essentially the rules or data that help identify and block bad software, malware, from messing up with your computer. This specific, very simple code was flawed when they created this update. Great example. I play college basketball. When I'm shooting for a layup, so sometimes I'm so used to doing this every single time, I take my eyes off of that little square on the backboard that I focus on when I make the layup, and I miss. And my team lost. I missed a game-winning layup because of this overlooking this little thing that I missed that layup. So I think this is really important that this isn't a cyber attack. This is purely quantitative. This is a quality assurance issue that they really should have had in place, and this didn't. And this is way better than an actual hack, in my opinion. However, this is something that's you're in this specific space. You're assumed to have a reliable, error-free update process. That's essentially the basic expectation for any tech company in cybersecurity. Like, you need this error-free update process, and CrowdStrike failed to meet that standard, and now they're getting penalized for it. Where for weeks, maybe even months, for months, I've been pounding the table that CrowdStrike is the only tier 1 cybersecurity name out of all the competitors. That is removed now. They don't deserve that tier 1 premium valuation, but it doesn't mean that you should sell this company. It just needs to be re-rated because it's shown there's some flaws in their process where before that was not the case. And that's a massive issue for CrowdStrike long term, because the reason they've been so highly successful, or my thesis for the company, was best in breed all-in-one cybersecurity platform. That thesis is out the door now. Why is that? I think a lot of CIOs, CTOs are going to be cautious of relying overly relying on one specific cybersecurity company. They're going to want multiple solutions. So my thesis of everyone just going to CrowdStrike as an all-in-one cybersecurity platform, that's out. That's why I don't think that's going to happen anymore because of the global outage that this one software update caused. So that was like, okay, so it's going to get re-rated where it's not going to have that sole spot on the tier 1 level. But guess what? Right now, it's cheaper than Palo Alto. So it's getting the valuation compression that it deserves for losing that tier 1 spot. It already happened. When it hit 260, it happened. Now it's at a similar valuation, cheaper actually by a couple percentage points than Palo Alto. So now that argument should not be made anymore because it is cheaper. The biggest argument is the black eye with CrowdStrike. The reputation is definitely taking a hit because I hate to say this, in my experience, I've experienced a lot of C-suite conversations in my career. CTOs are on the lazier side. Like they see their Falcon platform. They trust that it's the best endpoint product out there. They're going to assume the rest of the modules that they offer is in a similar caliber. So because of that, they're maybe less willing to just accept their word for it. They're going to like test their products. They're going to test like what else is out there. They're going to like make sure you do extra work to prove that it's actually the best like identity management software. It's best cloud security product, best endpoint product. Like they're going to make them prove it now, where before they just took their word for it. So now there's a black eye in their reputation. So because of that black eye, they're probably going to lose some revenue down the line, to be honest. They're probably going to lose some ARR. They're probably going to have to offer some free credits to affected customers. They're probably going to have to offer some refunds to affected customers. However, they will not be paying $5+ billion or going bankrupt. I'm seeing all over Twitter, which is wild to me, that they're going to go to zero because they're going to own billions and billions of dollars from all these airlines. Are going to sue them. All these like customers are going to sue them. No, there's a specific liability in their contract that shows that they'll refund for whatever the customer paid for, not all these implications from the outage what caused. Like that's not going to occur at all. You don't think CrowdStrike has the best lawyers in place to make sure that in fine writing those in their contract when they initially agreed? That's delusional. Like, yes, there's going to be some legal fee headwind on the stock long term for next like year or so at least, but they have $4 billion in cash right now. They're producing $1.2 billion in free cash flow this year. That's going to slowly get up to $3 billion a year in 4 years. So by the time they have to fess up, because the legal issues, they take time. It's not going to happen all this year. It's probably going to happen next couple of years. But by then, they're going to be producing $2 billion of free cash flow every single year. And they could probably afford to whatever the fine is. I think it's going to be more in the hundreds of millions of dollars, not a couple billion. But I want to say that about the legal fee issue. This is just more on reputation, where it doesn't deserve that tier 1 anymore, but it deserves that blue chip, like along with Palo Alto. Like Palo Alto and cybersecurity, they belong together now in the valuation. I can make the argument that long terms, CrowdStrike's still better because they can organically create all these new modules where Palo Alto kind of has to go outside the organization they're acquired, and that's going to cost a lot of money to do that, where CrowdStrike doesn't really have to do that. You just saw that Google is willing to pay 60 times their ARR of Wiz, which is cloud security competitors to CrowdStrike, to acquire Wiz. So right now, cloud security is 15% of CrowdStrike's total business. I think they make around $500 million a year, the cloud security business of CrowdStrike. So just use that 60x multiple on CrowdStrike's $500 million cloud security business. What does that equal? That's a $30 billion valuation on just the cloud security component of what CrowdStrike offers. That's it. Not the other modules, not the 85% of the other business that CrowdStrike has. Just the 15% is worth $30 billion in the eyes of Google. So long term, we're going to be okay. Short term, it is so annoying that something, human error, the stupidity that caused this massive IT outage that affected millions of people's lives, that's annoying. And that's going to probably affect next couple quarters, to be honest. But you don't think a 30% reduction in valuation in less than a week factors that in? At the end of the day, you have to ask yourself, all right, what is priced in now? I personally think a 30% reduction in their valuation in less than a week, that's pricing in potential miss on earnings, potential headwinds on net retention and ARR for next 6 months. Like, I think that's all factored in right now at this valuation of 260. So if I was a new investor who didn't have that exposure in cybersecurity because I missed that boat, which a lot of people did because CrowdStrike, I got in, my average cost basis in CrowdStrike is 130, and I got in a couple years ago. It ballooned up to 400. Now it's selling at 260, but I'm still over double my investment. And that's after a 30% reduction in value. So like I'm okay hanging on here because it's still 10% position. But if I didn't own any, I think this is a great opportunity to start initiating a position because you have to ask yourself, what's the worst that's priced in? Like I just said, the legal fees, they're way overdrawn. I think their go-to-market products are going to require a lot more work to get the trust of the clients. Like fine. But if you're like, I expected some peers in this industry, like it's still well known. Their endpoint security is still the highest quality. Like there's no data breach. There was no hack to their product. It was just human error. So they all are aware of that. They just know that was more of a company issue, not a product issue. The product is hard to replicate in cybersecurity. Yes, there's a ton of them, but it's still difficult to replicate what Falcon can provide. So I think this is going to hurt their cross-selling abilities down the line. I think it's going to be a headache on their revenue growth and ARR net retention. But I do think all this headwinds is priced into stock right now. Maybe we get new information down the line on like more visibility and like what they're going to actually have to pay, what the fundamental impact will be. But right now, this 30% reduction is all just based on air. There's still no proof of what the implications are. Let's just say half glass full view of this. What if it's not as bad as everyone feared? There's minimal impact on NRR, ARR, and revenue growth. And in fact, they beat and maintain their guide. What happens then? Everyone's going to say, oh, well, down, like something's going to occur. Like just wait until their earnings report. Like that's why right now it's just pure FUD. And generally when we're in a bull market and these kind of high quality companies dip 30% in a week, like this doesn't occur because of some safe way of getting back in. There's a FUD associated to the name. So there's going to be risk if you want to get into a high quality company like this and a 30% reduction. So I would be comfortable initiating a position here on this valuation because fundamentally it's very in line with Palo Alto. They definitely have a black eye. They're going to have definitely some cross-selling issues down the line, which they've succeeded in the past couple of years. I do think Palo Alto will absorb some business from this fallout. I do think SentinelOne, they're not comparable to CrowdStrike on the quality front of the products, but I do see some new deal flow probably flowing towards SentinelOne because CTO, CIO, like you don't want to overly rely on one cybersecurity company anymore. So what does that mean? Some deal flow is going to trickle down towards SentinelOne's business probably. And that's going to be a much bigger impact on a company that's like $7 to $8 billion worth if that occurs. So like I do think SentinelOne will catch a bid. I called out to you guys, like I got some leaps to SentinelOne when I saw that Google Wiz acquisition because SentinelOne is trading at probably, I think 10 times the ARR. I know it's different, like growth between the two companies, but Wiz just got acquired for 60x. I'm just saying, fine, SentinelOne doubles, it's going to be 20x. That's still a discount to Wiz, but like that double from $20 to $40, it can be justified, in my opinion, due to that valuation that Google's willing to acquire Wiz on the cloud security front. So that's why I bought some $30 calls, not $30, $25 calls from the leaps for SentinelOne. And this CrowdStrike thing happened. So I do think they're going to additionally catch a bid. But long term, if you're a 5+ year investor, this is a buying opportunity, in my opinion. It's a very Amex issue had a similar issue back then. Chipotle had a similar issue. Okta had a security breach. I know it's not the same. It's less competition, but they still had a breach. Microsoft has had a breach before to this extent. Like Cloudflare has had a breach like this. McAfee, they had to end up selling to Intel, but they had a massive breach back in the day as well. The list goes on. Like this occurs in disruptive growth, medium-sized companies. The biggest question you have to ask yourself, what will CrowdStrike do going forward in order to gain the trust from all these customers? That's the biggest question. But right now, I think they've been punished enough. I think the valuation is attractive enough to start a position, in my opinion, if you're using Palo Alto as a great barometer of what the valuation should be for a blue chip cybersecurity company. People want it at $200. I really don't see it getting there unless there's clear calls, like clear fundamental reason why it deserves to go down 30% more. And people I talk to in the industry, they still say it's the best product out there. It's a PR issue. they have to probably offer credits and refunds. We'll see what the implications of that, but I'd wait to see what the earnings show.
So really quick before we get out of Tesla, my dad was hitting me up Friday, and I done told him, I said, hey, sub 300 could be brutal. I would wait because I was just explaining to him, like, there's news, there's gut reaction to the news, there's sensible correction, which sounds like what we're talking about here, and there's stability. I buy somewhere in between sensible correction and stability. That's where I buy. Sensible correction and stability. And I told him, this very easily could fade to 250. Love you. Love you.
I mean,
sorry.
I did say privately to people, 280, 290 technically is a great bounce. It broke through that easily. 260 is the fundamental level. What happened today? It bounced off 260. Let's see where it goes tomorrow. But I think there's gonna be a dead cat bounce at 280, and then probably hits resistance and probably slowly consolidates until we have that earnings report. Then we get real.
Yeah, you need that. You need that slow moves. 250, 260. That's got to happen, or it's going to be unstable. So there you have it on crowd from the man who knows more about that company than I think they know about themselves. So take it for what it's worth. So let's talk Tesla here. So we were just talking before the stream about the level of disappointment I've experienced in myself for not listening to myself, knowing this drawdown on Tesla Friday was a mirage. I should have gone into some options. I did not. So, you win some, you lose some. At least we're long from 140 and up a significant amount right now. I was hoping to have a nice fat options position too. But we just kind of missed that break over. We told you the break months ago. We were waiting for that break over 205, 203, 204, 205, right around there. Take a long-term position. Now it exploded, and you win some, you lose some. We got the equity, we didn't get the options. It happens. It happens, man. But this setup is exceptional. You got that increase in volume there on the buy side. That's good. We completely ripped back up through the fade, and we are sitting right around where, like, I would consider our nominal local support, 253 and change. This is a key level to watch. Once we break above here, then it's easy sailing back to 266. So a question that I'm getting a lot on Twitter, well, where do we go from here? And it's pretty straightforward and simple. So like our kind of target 1, target 2 was 266, already hit once. Target 2 was 278. So those are two pretty key levels that you're going to see hit there. And now to zoom out a little bit more to give you some reference, once we beat those targets, it's always a psychological push to 300, always. That's where the mind goes and the body will follow. So the chart will too. 300 is that pivotal point where I think this price is really going to see some struggle. But once we break 300, then I think the next psychological level we're all following is 400. So what does that mean? Well, as we talked to you guys about before, your potential here, again, so for those that are new to following, this is what we did for you like 6-7 months ago. We mapped out the bottom and the top of this range because it's played there very well. You would have had this breakout at 200 to 260. You would have owned this stock at 140, 150. You would have traded this whole breakout, made a ton of money. You would have been happy. If you didn't, just go ahead and hit that follow. You'll get it now, or go to the link in Shay's bio. You can get access to the community and so much more. Links also at the bottom. So 278 and 300 are going to be our next. Let's see what Jimmy Javelin. Jimmy Jav. For what it's worth, Tesla's only up 1% year to date. So here's the thing. Time is a construct. We all know. I don't really care about the yearly. I don't care. I care about where is it relative to actual valuation, which is always a base combination of what are you doing for me now? What are you going to do for me later? It's always a middle ground. It's a median between those 2 points. The market is always priced in the future. Always. It's already priced in. But it's also important to understand that, like, being that it's disjointed from the economy itself, even though it follows it to some degree, it's a disconnect, right? Stock market does not equal the economy. Right now, Americans are struggling. American stock market, booming. Makes no sense. But if you look at it on a year-over-year basis, I just feel like you're not getting the best. Like, you're getting a picture, but not the best one. I would say, if anything, I would just focus on this monthly chart, and I would look at the relative position minus 3. That's kind of where I go. So relative position is here, minus 3 candles. So 1, 2, 3. relative to 184. We got trend support. We're trading significantly stronger than we were 3 months ago, right? And then if you go T minus 3 again, puts you here showing, okay, well, we were trading 6 months ago off 250 and we sold off, but we know we have long-term, and I mean long-term pivot trend support dating all the way back to 2019. So we're going pre-COVID here. So as far as relative position goes, we are trading in a position of significant strength right now from a chart perspective. They approved the shareholder vote. I think that's also another like current event, news event in favor of all those that are long Tesla. Elon is becoming a little bit more social again with the laser eyes thing. I think anytime he starts memeing shit and every time he does weird shit, it's a good thing. It's a good thing for meme coins. It's a good thing for Tesla. So I think that's what you're experiencing right now. And so I'll draw your attention to the monthly chart here. RSI breakout at 50. So RSI basically found its comfort position around 50, traded there. Price action moved, but buying and selling trend strength did not until recently. So whenever you see those areas of confluence, right, between the indicator and the price action are telling you the same story, and you match it up with what you think your thesis is, what your synopsis is of what they've done, and what your thesis is of what they will do, when those all meet together to form one cohesive story, that's when you know you have a pick of the decade. Like, that's when you know you have it. So that's what we're experiencing here, is everything is lining up in perfect sync. Wouldn't you say?
No, I mean, if you're a Tesla investor, Pascal, I got in late last year, so I haven't been most of this like massive consolidation that Tesla's been experiencing the past 3 years. You should love this breakout because earnings, it's weird to say, but I think it's a nothing burger for a stock like Tesla because what's driving it is more narrative. It's a story stock. What do I mean by that? It doesn't matter what they produce tomorrow. Like, we already know like their energy business is going to be probably really strong. We already know they beat on deliveries. They already caught a bit on that. So it feels like the automotive industry is like the worst is behind them already. So that's a major catalyst for Tesla going forward. And if you want to participate in the rate cut is coming narrative, which is why small caps are catching a major bid, same the regional finance banks, like EV names will also catch a bid as well. So Tesla is obviously going to be the biggest beneficiary off that specific narrative as well. So like they have the energy business like flying off the shelves. They have the automotive industry is improving. Rate cuts is going to be beneficial for the EV markets. And now, it's funny because narrative drives price, where because it's at 250, now people are willing to accept that Tesla will be known for selling rides, not cars. But when I made that statement when I was at 150, people thought I was just a fanboy. Now it's becoming more of a reality that FSD is really close to actually being there to scale commercially. And Robotaxi could be the unveiling of that. If that's the case, it could be a massive Uber disruptor. It could be a massive like valuation multiple. Like the valuation was multiply off that because they're disrupting a massive industry and essentially creating their own industry that nobody else has really done yet. So I think that's why it's more of a story stock, where right now we caught the bid from like, I think it was like 180 to 220 off that strong delivery numbers in energy business past quarter. They released that number a couple weeks ago. So right now it's all about guide and what are the margins on the vehicles that they sold. But again, I think it's going to be a minimal impact because everyone's just focused on Robotaxi and FSD. And maybe Optimus, but that's way out there. I know whatever like Elon says is going to be like some production next year and like fully by end of next year or whatnot. But I'll see when I believe it. Right now it's just purely Robotaxi and FSD. And that won't really be shown at all in the earnings report. So I think it's all going to be on that October event. Tomorrow, I'm just looking for them to like not have that much margin compression on the vehicles that they sold, and it just provide good enough numbers where it doesn't sell off. And then I think we continue going higher towards that October event.
I couldn't agree more. And Bayern Munich, he asked a great question. That's why he was hyped that he got on the screen. If you want to be, we got 3,500 people here. If you want to get famous, just ask a good question. I'll pop you right up there on the screen. And love good questions. That's what keeps us going here. So definitely, please make sure that you ask good questions because that's what I think facilitating the conversation is really what matters. So We gave you the charts, gave you the look on Tesla and what to watch. So let's scoot on over here. We are gonna. Oh, yeah, I forgot how messy this is on this SPY chart because we've been mapping these levels forever. But the good thing is it makes our work a little easier. So 22. Get this up here. So right now we are trading against, bumping our head on this moving average here with long-term trend resistance above our head, right? So realistically, the SPY is going to be pushed down, I think, quite a bit over the next couple days. It might slowly start to creep up, but I don't think we're seeing anything explosive. My bet is definitely on the bearish trade over the bullish trade right here, right now. So looking at this, we're on the hourly chart. We're going to skip on over to the 30-minute. Most of these trades will be validated by this 30-minute chart, so I would definitely suggest pulling it up when you're looking at these options trades that we map out. We're going to give you the exact options contract we'll be trading. Again, these are the picks that have yielded a 100% runner on either side of the trade for almost 52 weeks in a row. I believe we're at 49. So basically, we've hit a 100% runner 49 out of the last 52 weeks. You do the math on how well you'd do if you had those in your portfolio, and I'll just show you how we do it. So looking at the chart here, again, if this EMA support holds up here and we get a nice soft open tomorrow, meaning we're opening within the range that we were trading near the end of the day, I think that this thing could find a nice little support bounce right at about 553. And if that happens, then what we're gonna see is probably a stronger push up. And we have this really interesting gap fill opportunity here on the short term, where we saw such like just a knife to the throat, and it bled out. That it gives us an interesting opportunity to then close that gap, which I think we'd push to the bottom of this price action right here, which puts us at about 556. Meaning, I think there's like a $2 move in the hopper. I think we're going to be pretty consolidated after seeing the support bounce here. I don't really think that the price action is going to go crazy anytime soon. We move through this range quickly, but I'm not liking this setup enough to say, hey, look, we're going to make stupid amount of money here. But you can get your nice 2-3% move, which will translate to 15-20% on the options chain. So we're going to go through that contract here. So the first one is that bullish setup. Should it maintain that moving average, find support 553 and change, bouncing off the top of this range. If that happens, then we're going to see this push to 556.5, possibly as high as 557. So I'd say that's kind of, those are the two marks I would put there. That would be one, and then this would be two. So meaning we could basically ride along this trend line here, but I don't think we're going to break it and push up significantly. Our range that we've identified is 550 to 559. So basically, we'd be trading the midpoint back up to near the top of this range. So let's go into I gotta get Rob. So we can pull up these contracts here. Sorry, I gotta switch my screen. All right, so we're going to go ahead and pop this SPY. Trade SPYs. By no means am I saying Robinhood's the best platform. It's just the easiest and most common. So before you pause your judgment, and somebody's like, "What the hell would I ever listen to you about options trading if you're using Robinhood?" It's like, dude, it's just everyone's using it. It's the easiest way to explain things to people, so I use it. Options premium is actually pretty high, and since we're not going to get that big of a move, wow, price is betting on upside. Interesting. So let's say this changes things. Let's say we wanted to aim for this move here, right, over the next 2 days to basically retest 559, that point of confluence being right here, where our horizontal range meets our ascending resistance. I'm not on the chart, so 1 second. So we're going to take a look at this 559 here. Okay, this 559 call for 18 days out. One always have it close to 3 weeks of expiration on those. And I'm going to flip back to my chart here because I think something just popped in my head that actually makes more sense. Boom. All right. So I'm wondering now, seeing that options chain and seeing the move being bet to the upside, that we don't clean right back up there. This is interesting because you have your liquidity zone here where buyer just that sell program hit, dude, and it just, which means moving through it won't be hard. And the last couple times we were trading right around 554, we did see like a very quick, like, look, every time we've gone through, this is okay. Now we're getting somewhere. So look at this area right here. Every time we go through this area, it's extremely quick. So why would it be any different now?
I mean,
I take back everything I said. I think we're going to move through this rather quickly. Like, look at this V here. Like, it just ripped up. Everything inside me is like, why would this go up? Like, you're trading against resistance. You got long-term functional resistance. It just is stupid. But the options chain is saying upside. Something inside me, I don't understand, is saying upside. Sorry, go ahead.
No, I think they're playing earnings. So tomorrow, Google is the first major earnings report. So that's more like you get the first glimpse of the Max 7 CapEx spend. That's going to affect the whole semiconductor industry. You're also going to get cloud. Google's the first cloud name. You're also going to get ad techs. Like Google's earnings tomorrow is across multiple different industries. And right now, semiconductor names are a large component of QQQ and SPY now because they've grown such a big companies. So I think they're betting on tomorrow specifically. Google is going to show that the party will continue on the CapEx spend on hardware, that business is doing great on the cloud, continuing because they had a home run earnings last quarter for their cloud. They're betting that's going to continue as well. So because of that, and you clearly saw the past week or so that the breadth widened to small cap and risk on, which is really healthy for the market to continue rallying. That widened breadth, V-shaped recovery we saw today. Now there's clarity in the market on Biden's finally out because the market hates any signs of uncertainty. Like if there's any kind of like, oh, what's going to happen on presidential candidates? They hate that. Doesn't matter if it's good or bad. They just don't like it. Now we have clarity. It's going to be Harris versus Trump. And because of that they're re-rating the market on that, taking that factor of uncertainty out, along with Google's earnings tomorrow. Interesting catalyst.
Shut up, dog.
So yeah, I think that's exactly what's happening.
Interesting.
So
shout out Luis real quick, or Lewis, whatever. Look, we're never going to show you shit that we're not doing. I've never understood that. Like, just show your own shit. Just show it. I'm not going to show you a one-off. Like, here's my shit. Like, trust me or don't. I don't give. I'm here because me and him need to work this out for ourselves, for our own money. We just wanted to put it in a way that you guys could also see it and hopefully benefit from it. Like, we don't all. It's like that's the beauty of this. Is like if you look at it as a team performance, right? We can all collectively beat the market. Like until we became millions, and it becomes a little different. But we're not. There's like 4,200 of you here. We can all collectively win at the exact same time with the same trades, as much as we can all collectively lose. And so I guess that's kind of just our deal, man. Trust. I mean, trust is a choice. Faith implies trust. I'd rather just fucking show it to you and like. I don't need to convince you. It's like just what it is, man. Like this is what it is. I turned this account from $9,000 into I think I went to 170-ish the first time, took it back to 30, took it to 250, took it back to 50, and now it's took it to 50, 100. We started this again from 30. So there's your deal. So okay, hold on. Let me get back to this. Lewis, shout out, my man. I'm glad. Hit me up. What's your name on Discord? Because I don't know who anybody is unless I see your name on Discord. Man. That's where I know you from. I'm glad you're crushing it. So let me pull this. Kenneth's getting a little shout out. So here's the deal. Let's get back to this chart. So this is the contract I'm looking at. Given what was just explained to me, this actually makes sense. So thank you, because I felt it, but I couldn't. I was tinkering, but I couldn't put the words to it, and you took me right out of my mouth. Look at us, huh? Look at us. So, all right, we look at this as 2-leg up. I think this could be a nice 2-day trade. So should we open strong, and I mean firm support touch 553? We cannot sell off. Like, I don't want to sell off. If we hit firm support touch, that to me validates this little V here, which tells me that we're going to see a nice little scoot right back up to 559. So that's the contract. That should see a significant return because we'll be at the money by the time it runs in 2-3 days. You should have almost 3 weeks to expiration. That should be a great trade. So that's your bullish trade. Let's look at what the bears have to look forward to in their depressing state of affairs. As much as I want to believe, I try to be unbiased. I think I'll always be a perma bull. Like, I don't know if I could ever not be a perma bull long term. Like, if you were just looking at opportunities that will be squandered all day, I wouldn't even want to do this. Like those guys that publish the short reports, I couldn't even do it. Like, I couldn't do it because it's so depressing. I just couldn't do it.
I mean, I did one show report. I emailed it to you. We're about to send it out to my to people who sign up to my email list. It was tough.
Hold on. If you guys don't go to his, yours is
Stock Savvy Shy.
Yeah. For those that came from our channels, like, yo, you guys got to go. This is totally, you might, if you have our weekly watch list, this is a different list because this is just his stuff. You have to go over there and get this. He does have a short report coming that is like, I was sold on it. When he was pitching it to me, I'm not gonna lie, I was sold on it. It makes sense. It's one of those ones that's just like, oh, that just makes sense. And the best part is, as this one loses that we're gonna mention, the one that's winning is one that makes us very happy. So it is a short report, but it's kind of like a victory. It's more of a victory for us over here than it is a loss over here.
Yeah, I mean, I felt bad writing because obviously, like, people are probably invested and think it's like a great company and etc.
But dude, if they can pull out before it goes to zero, you saved them, man. Saved them.
True, very true.
So savior is kind of what I'm hearing. I'm picking up here. So yeah, that's your SPY bullish trade. Let's explore both sides as always. I want to give you an unbiased opinion so that you guys can. I'm just gonna leave Shai's Twitter up there so you guys can get that. Give him a follow too because he posts personally way too much shit on Twitter for my liking. He's like giving you the whole roadmap. The man deserves something for his time, but he's giving it away like it's going out of style, man. So if you're hungry and homeless, that's the place to go to make some money. Basically, I think. Yeah, all right, I'm Porter. I'm gonna go through that right after because we did crush that soft landing Bitcoin trade. Let's stick to the bearish option trade on the SPY. So again, we're still on the 30-minute chart here. Let's talk bears. Let's talk depression, and let's give them their pound of flesh, or at least their moment in the sun, so that they can know that we mentioned them. It would be very similar open that we originally discussed, except for instead of getting that support touch, we get a break followed by a retest. And then just a decline 550. So a $4 move to the downside, which is I'll take it. Let's explore what options contract we'd be pulling up. I'm not even going to switch you screens here, so we don't have to go through all that again. But the same expiration, I'll put it on the chart here. So that'd be the 550 put. You know, I like staying within my bounds on the expiration. Okay. So that would be the 550 put. Same expiration. Currently trading at about 400 a contract. Delta's 0.35. IB is relatively low. That would be the bearish options contract we'll be looking at. So again, 30-minute chart only is what this analysis is valid for. Breaks down, tests up, and then fails, and then traces down to 550. Here's the beauty of this trade for those of you that take it, right? If we violate here and we break 550 on the downside, you got another $2 of movement where your delta is just singing because you're in the money. So remember, with options, when you're in the money, meaning like you're trading 550 puts, it's below your strike, that thing accelerates like nothing, nobody's business. It's unbelievable. And if for some reason the market takes a shit, I think you got downside to 546. Right around here, which means you would have $4 of additional movement past your in the money premium. You're going to make a couple 100% on that trade. So congratulations. You're welcome. Gave it to you for free. I don't want you to buy anything. That's kind of the point we're trying to illustrate here. Just to get back to it before I take his link off. I want to show you can make money without ever spending $1. And then like we're hosting a live trading event in July coming up at the end of the month. Then once you've made money, come to one of the events or something and take that to the next level. Don't give me $1. I don't want your money. I want you to make money. So it's almost like we paid you to come to these events. We paid you to come check out this additional research we're publishing. Let us pay you to check out this stuff. What a beautiful system. Is it not? I mean, think about it. The amount of money that people could have made following this for just a few weeks.
No. Literally, I wish this existed when I was like right out of college or in college. Like I lost a lot of money trying to make the mistakes back then myself, learning like, oh, I have the edge. I go into a high-end UC. I have this job lined out of college. Like I know my shit. Like I'm going to go hard on the market. I didn't know anything. I literally did not know anything. And I've been spending probably like at least 6 years, 40 hours a week. I'm no joke, not exaggerating, just like learning, doing the research on the companies. Like I don't just look at their fundamentals. Like I know so many people out there who just like, oh, this is growing 25% and they have 20% free cash flow margin. Rule of score for 45 plus. That's a winner for me. No, we're in an absolutely different. We are in a different world now than we were just a year ago. Like AI is going to cannibalize so many different industries that you have to know that company inside and out. Like I tell us this, like there needs to be a philosophical approach towards investing now where you have to see what the actual product is, the code that's in the product. Can it be replicated? Can it be disrupted from AI? Can it be cannibalized? What's the competitor's product like? How is it different? The list goes on. Like it's not just numbers anymore. It's more thematic, philosophical, and there's numbers as well. But like you have to know this stuff.
Dude, Warren Buffett, this is maybe controversial, right? Warren Buffett's a G. The dude has done it. But let me tell you guys this. His approach in this day and age would not work. He would still have winners, but he wouldn't be Berkshire Hathaway in this market. Because in all reality, I don't think anyone is going to capitalize like that. Like, I think it's weird that corporations have hit this point where monopolization is just a reality, a sad reality, because it shouldn't happen. We have these weird oligarchies within each industry that are just, you're never going to tear them down. It's unlikely, right? And now with the advent of like all of this explosive technological growth, it makes it even more likely because they're the quickest and most efficient to adopt and implement because they got that money. Okay. And then all the new inventive people that come up with these new technologies, what do you think they do? If somebody puts $100 million on your desk and says yes or no, you're probably saying yes. It's just what the reality is. So there's nothing to stop it short of government intervention. Okay. Now take what we're telling you right now. In this day and age, you have to understand so much. And here's the beauty of this. You have to understand so much that even we collectively or individually, we can't even handle all of the amount of information that's needed. We do it as a little collective, right? Like when I got a good idea on a chart or in a sentiment or I have some just like itch in the back of my brain, I talk to him, I talk to 2-3 other people, and I get a group think of like, oh, these are other angles I hadn't explored. It's everyone is a specialist in their own little area to some degree, and it allows us to work smarter, not harder. So collectively, we can come up with the most well thought out trade idea, and you get all of that. That's kind of the point. It's like you kind of got this little like, it's like a little expert in your pocket, like a little leprechaun that's just whispering these sweet nothing trade ideas. Why'd you be at $4? You know what I mean? And then look, it's hitting what, $14 today? So that little leprechaun basically turned your $1,000 into $4,000.
Yeah.
That's pretty much what this is. So, all right. So those are your options trades. You got it.
You just talked about Jumia. Should we talk about Jumia now?
Let's
you mentioned Jumia.
Yeah, why not, man? Why not, man? Can you get this back up?
All right. So while he's bringing that up, obviously, new 52-week high. Almost hit $15, which is wild to say. When I initially pitched Jumia, I was like, what, $6 maybe back then. I got in at around under $4, but I pitched it around 6 on here a couple months ago. I said it's going to hit $15 by next year. I didn't think it hit.
Oh, dude, you were talking about it. Well, you were talking about it, and then when you brought it to the stream, it's 561.
But see right there, and it's near triple almost now in the matter of months. So why did it catch a bid today? I keep getting asked, like, why is it up 18%? Their earnings date just got announced. They never, ever have their earnings this early in the cycle. Then they just announce in 2 weeks. Ever. They're always towards the end. They have no analyst coverage. They now have Benchmark covering their name. So Benchmark just gave a $14 price target on Jumia a couple weeks ago. First analyst coverage, institutional coverage in over 2 years. So that was more of like, wow, narrative change. It's a real company because we actually have estimates to rely on, not just myself who created my own estimates where I think it's going to grow top line 45% for the next couple of years with 15% EBITDA margins. Like that was my guess. And now they produce 40, Benchmark said they're going to grow 40% next year with I think 12 or 14% EBITDA margins next year. Regardless, they're going to be profitable next year. So this is my thesis of what's happening in Jumia. I think the constant currency issue that they've experienced specifically in Nigeria, that's behind them. I think before, like we had to always do a constant currency revenue growth. Like let's just say the currency exchange was normalized. What would the top line growth be? And it was always way higher than what they actually produce. That's behind them now. Now that we wrapped up that previous quarter, like they're going to be aligned, so you don't have to really do that constant currency finessing to the numbers. So I think that's a benefit. I also think we could be aligned with a free cash flow positive quarter. If that's the case, the stock will skyrocket because right now they had a profitable quarter, but it wasn't a free cash flow positive quarter. But now if they show that they can produce free cash flow quarter after quarter incrementally,
God, that would be ridiculous.
While growing the top line 50%. But I think that once they prove that they could do that, I think they're going to slam down an equity raise for secondary offering. Like, look, we just proved to you that we could get to this point without doing secondary offering. Now that we did, we're going to raise $200 million in cash, invest in our infrastructure, create a logistic network for our area of Africa that's underserved and underutilized. And then we're going to go ballistic for the next couple of years on growth to maintain that 50% CAGR. Who knows how long, because it's only $1 billion company. It's rare, absolutely rare, that there's a leading e-commerce company in an underserved region like Africa that's worth only $1 billion. But that's the case right now. It's a wild times, but that is the case. And Jumia, the biggest factor on Jumia was solvency risk. Like, can they actually ever produce free cash flow positive quarter? Like, do they constantly have to dilute and essentially be like a shitco company that has a big presence? That's not the case anymore. Like, they just provided an operating profitable quarter 1 quarter ago. If they do a free cash flow positive quarter, I do think it's going to be going for the races to 20 because on the chart, it looks like it wants to fill 20 instantly.
Yeah,
and now,
it does, dude. So I was just doing the math. You gave it to them. At least people that followed you got it at 293. We predicted on this stream 341% upside to $10.09. That was our target, right? It's boomed that target. So boomtown. But to take a step back at the second targets that we gave them, 21 and change, followed by 27.5. And right now we stay north of 1440. We're absolutely going to 21 because look at this liquidity here, dude. Like you can't ask for something more delicious than this.
And it's a different company too. Like I get everyone's fear, or like you have stitches from being scarred or whatnot when it ballooned to 70 and went straight down to $3. I get that, but it's a brand new, different company, and like I don't want to compare it. It's like, yes, people reference it as the Amazon or Africa, but it's not going to be the Amazon. But imagine like when I got in at $3-4, like what was it, $300 million valuation?
10% of the Amazon of Africa. 10%.
Exactly.
10% of Amazon that we see, which is
it's tiny.
Again, guys, digital just changed. It changed everything. And again, we've talked about this a billion times.
Mm-hmm.
We just hired a copywriter. He lives in Kenya. Extremely competent, smart dude. I'm paying him less. So he charges less than if I went and just grabbed a guy on Upwork in the US. He's probably 75% of that price. So if they're charging $3,000, he's charging just below that. So I'm saving money. He has the same skill set, writing ability, right? But he can command a lower price because his money goes way further when he takes his USD in there, right? And that is happening because, again, he's young. I'm pretty sure he's younger than me, a couple years younger than me. So he's been able to scale up his knowledge base and capability over the years, shit like YouTube and Udemy, all these online courses, right? To take the job as the best man for the job, which is quality versus price, right? That's how you find a good median. And he's the best blend. So here's the thing. Where does he spend his dollars? He's not here. He's not using Amazon. So as their economy grows, which it is, what do you think is going to happen? I think the consumer, like the digitally facing consumer products, businesses in those regions are going to boom. So I think that their consumer spending dollars are going to be from zero, nothing, to even if they grow by 50%, it was zero and now it's X. You know what I'm saying? So from there, it's just a stepping stone. We're going to build this base of these companies. Like, it's interesting that this is the emerging markets opportunity that has basically come onto the scene, was everyone was looking at China over the last couple of years. Like they're beaten down, valuations are terrible. That's where the emerging markets are. And even India, right? Which I would argue India still has a pretty competitive landscape and they could take over a significant portion of like the new digital blue collar labor that exists, right? The click farms and the marketers and all that other shit. I think that they'll take a pretty significant market share, right? But nobody's looking here. And I feel like they should have been. It's like India, China, that was the head fake. This is where it's happening.
No, 100%. And we're also not factoring in Starlink. Starlink is getting launched in Africa recently. And that's like, it changes it completely. And you're also not factoring in like Jumia has a fintech component. They have Jumia Pay. Like a lot of people don't know, like they have a fintech component. So like, again, consumers start getting more money and they start having more like Starlink's going to help the accessibility of this underserved markets and area. They already have a fintech component to it where I want to say very close to 100% of the orders are completed using Jumia Pay. Okay. Guess what's also going to happen? They have a UPS partnership that got announced 2 years ago. Everyone forgot about the way they so Jumia also employs like locals, citizens to numerous non-urban areas to like essentially bring the internet directly to people's homes through JForce, and then they deliver the packages by hand. Amazon can't do that. Alibaba can't do that. Only an in-house like e-commerce presence like Jumia can have that luxury of doing that, knowing the ins and out of the whole region, being infused within the citizens. Like if you talk to people like in that region, they treat Jumia as like the Metas, the Googles that we do here. Like it's that kind of presence in Africa. It's just totally underserved and underutilized. But that's going to change due to Starlink and the consumers improving in that region. That's going to instantly benefit Jumia via Jumia Pay. That's going to be used to buy consumer goods products on their platforms. Like I think the story is so early innings of this. If they can actually produce 40+% CAGR next couple years while just hitting free cash flow positive, like that's a complete re-rating on $1 billion company. And this could easily be a $5 billion company like that. And if that's the case, it's close to $100 stock. That's the crazy thing about runners like this. And if you invest at the right time at an inflection point, I found Transmedics at $40 because that Summit Aviation company they acquired is like, wow, this is a game changer for Transmedics. They own the whole end-to-end network of organ transplant delivery system. Now they acquire these the jet company, aviation company. They own the whole logistics. That's a massive moat that the competitors can't duplicate. Jumia has the similar traits. I was always worried about their solvency risk, but that's diminishing. Especially, I really do think they're gonna have that home run or earnings report and produce that free cash flow positive quarter, like prove they can do it, then slap the $200 million secondary offering, which I do think will make the rare occasions. I do think that will make the stock go up because it's going to be at the market, in my opinion. It's going to make the stock go up and solvency risk is out the door. All of a sudden they have $200+ million in the bank. They produce free cash flow positive quarter every single quarter. They can invest in infrastructure. Like everything is aligning up for a name of Jumia. So it's just like, one of those rare opportunities, like Transmedics, Jumia's one, like those are two massive winners. I think they're both still small caps. So I see a path towards becoming a $15+ billion company.
Yeah, I couldn't agree more. And before we move on, so I got a couple messages about people wanting this chart with basically our price targets and stuff. So I'll just put it on the Penny Boys account. And if you could just retweet it or something, or just copy the image, put it whatever, so that everybody will have it. Fear not, you'll have it. I'm also going to start. I haven't done this yet, but start putting them on TradingView, so you guys can actually go in and mess with it yourselves. But for now, I'll post this in there. I'll tag us both, and he could retweet it, whatever, so that you guys have it to keep up to date on the analysis. I think it's important to understand both sides, as he eloquently put it. The fundamentals tell you what to buy. Technicals tell you when to buy it, and I think they also tell you when to sell it. For those of you that are taking the shorter term outlook in certain perspectives. But we're here at about 5 o'clock, up against the hours, this last 20 minutes or so. We'll get into that smash or pass. You guys post the tickers. We'll look at the charts. We'll talk to companies, see if we like it. If we don't, we'll pass it and move it along. So feel free to type them in the chat, in the comments. One ticker per comment. Feel free to mention a few. I want to make sure that everybody gets their chance here, gets their pound of flesh from this point on. And while we're waiting for that, I'll just make a brief mention here of NVIDIA, because I think it's important, and I've gotten a lot of questions on Discord and Facebook about this one. So type your tickers in the chat. Just put one per comment. We'll pull them up on the screen, and we'll go through the chart. Yeah, put your ticker in the chat. Interesting position here. So we have a few little trend channels on NVIDIA. These are our lower, and this is our upper. So this is currently functioning as resistance because we didn't break through. I did not add a short to my position. I pray to God I don't regret it. I really wanted to go short 130 to hedge my shares because it's a significant size position, but I went against it just because this thing just has everything in me is saying we're going to see a little more downside the next couple of days, and we'll settle around 117, 120. But I don't know. This one scares me, and the upside just is so strong when it's strong that I don't want to get turned upside down on some short options. So I pruned out, and I went against my own instincts. And so we'll see. You guys will get to watch live as I live in the deep-seated regret of 5 to 10K loss if I don't hedge the position. So let's get right into it. First and foremost, we've talked this one a number of times. SoFi.
Long term, you guys know how I believe. I'm in the middle. I don't know if it's a bank company that has tech features or it should be valued as a fintech company. But if the rate cut is coming narrative is real, SoFi will benefit off that, and it's catching a bid because of that. Same with all the other regional banks and banks. Like that's why I'm treating SoFi as a bank because it runs when the other banks do. That's being said, I think IWM and KRE specifically is gonna run for quite some time. That reposition we saw the past couple weeks with volume, that's real. That's not Austin and I just buying that stuff, like those stocks. Like that's institutional money flowing towards this specific section. SoFi will benefit off that. So I think in the past, it's always you sell at 850 and you buy under 7. That's always been the case for SoFi in this massive base. We'll see if it breaks out. I think it really needs to break $10 to really run. But at the end of the day, I just don't know if it can because of that bank status it has associated with his name.
Yeah, we've covered this one a bunch because it's been asked a lot. From the chart perspective, we talked about this. It's an easy trade, $6.80 to $10 over and over and over and over and over. You can see that this one follows our range bound strategy to the T. Worst case scenario, trading from $6 to basically $7.58. $2 move every time. Long term hold, they failed to capitalize. So for me personally, this one's getting
it's a hold. Wait and see. Yeah, it's I guess the middle ground.
Pass for now.
Yeah.
Derek Phillips, GFL. What is the hell is this? Environmental subordinate voting shares. I don't know what the hell this is.
I'm reading up on it right now. I've never heard of it either.
I mean, it's trading like a champ, but yeah, above 37, this thing is golden. But I have no idea
It's a waste management company in Canada. That's why. So waste management's like all-time high right now too, I think.
Well, I'll tell you this. From a trade perspective, this thing looks like it's setting up for a breakout. I mean, I can give you an idea of where we think it's going to go. But so basically over 40, you got 10% upside with a potential of 57. Just if you're taking like a Sybil fib analysis, which is usually spot on with things that have been range bound for over a year. So for what it's worth, nothing about the fundamentals. I don't know anything about the industry, but the chart is a delight. So I would say, yeah, only over 37. That could be an easy positional trade. Take a $3 loss for a $10 to $15 gain, but be careful. To each their own. Long term, I don't know enough about the fundamentals of the company. We could mark this one down, maybe do a little looking into it for next time, and cover it next Monday on the long term viability of this. Waste management's been booming, so yeah, I don't know. Inverse China, Yang, Yang.
I mean, I like it.
Rip. I'm just so tired of this, dude. I just want my Alibaba position to rip. That chart is just begging for $120, and it's nonsense that I have to wait this long to get it. It's just nonsense.
You know my thoughts on this. I think anything China related, it's a no-go with the Trump-led presidency.
I would say over 950. I'd take this. This is the 3x bear Chinese ETF. So this is something that would absolutely capitalize on a tough Chinese market right now.
So I do want to call out these leverage products. Like there's a ton of slippage if you hold it for a long period of time. Yep. So like use this as a vehicle to trade, to capture the alpha on whatever the narrative is. Don't hold this for more than a quarter. It's a week's, not months play.
Yep. So basically what he's saying is if you want a nice 3-4 week swing, this is where you'll get it. But past that, this is not like, oh, I'm long and strong on that, and it's going to be awesome. It's not going to be awesome.
It's designed to like not do well long term. It's just a short term.
It's designed to depreciate, basically. Yeah. It's ridiculous. So I'm going to tell you right now, Yang Tang. It's.
Did Amazon finish red today?
Dude, Amazon's pissed me off. Jeff needs to get in there and do something. This isn't funny. This isn't funny at all. So long-term positional trend strength, it's fine. But those December options are just, I guess it's December, so I just need to buy more. That's really the issue here. So when you think about it, Jeff's being pretty sweet right now, giving me an opportunity to buy some more into winter earnings season, because everything about this chart looks like we're going to see continued upside.
Again, Google's tomorrow. If they show strong cloud growth,
it's
Amazon will catch a bid. Doesn't matter how much Bezos sells, you can't ignore the king of cloud computing if Google produces strong cloud numbers. No, Amazon.
A lot of if-thens. Karsten, ALAR, no idea what the hell that is. Alarum Technologies? What the hell is this? This looks like a really fun reverse split party that I didn't get invited to. Wow, this thing climbed from the depths of hell, though. I'll give you that.
It's a very cold falling stock.
Really? I've never even heard of it. That's a hell of a cup and handle if I've ever seen one, though, let me tell you. Wow.
Here,
look at this bad boy. Unbelievable. Unbelievable.
Right, so if you guys, I can do a little brief overview on what Alara is. So it's a small cap name. Clearly, you see the cup and handle, the volatility. It essentially specializes in data collection, for which Gen A represents a massive tailwind, supposedly, in this name. Essentially, I won't get into it too much, but it collects data. And if AI's thematic is going to only gain popularity, the specialization on web data collection solutions will be like massively, it will be crucial to train these like AI models. So that's the thesis on Alarum. Like you need to train these AI models, collecting all the data from these websites. So like you need this precursor software in order to do that. Tricky thing is Palantir does this. So why use this over Palantir? That's why I never got in. You don't, in my opinion, like hyper niche component of the AI thematic that Palantir just has in their suite of products already. It made a massive move already. It's like cheap fundamentally, but again, I just said AI is going to cannibalize the whole sector and industry, and like whoever has the best suite of products all in one platform will succeed. Alar doesn't have that. They have a component of it. Palantir does. I just don't think they have a stand chance. So long-term thematic. That's why I'd pass on this name, but
pass. Moving on. Toast. I think Toast is. I hate them because this is what's ruined your experience with every fast food or retail anything. If you're tired of tipping,
I love tipping. I don't know what you're talking about. I love.
If you're tired of the excessive tipping for nothing, this is why. But I think we did a rest and retire on this around 16, 17 bucks. So this one you should already had. We knew this was coming, and it looks like it's setting up for a move even further, honestly.
So my rule of thumb, I don't invest in companies that have under 30% gross margins. They don't scale. Like, doesn't matter how much revenue they produce. For every dollar of revenue they get, they only keep 30% in profits. That's hard to scale. Toast has 28% gross margins. So like they are the best at what they do in POS, point of sale system, but like biggest presence, 20% CAGR on top line, but mid-single digit profitability margins, that'll always be the case. Doesn't matter how much they grow on the top line, they'll never have juicy enough margins in order to really differentiate themselves among the competitors. Like this is a heavily competitive field. Square is involved. Like there's so many different names involved in this specific space. That's thin margins, highly competitive. That's a pass for me.
And it's all marketing. I mean, no one's going to beat anyone based on really anything.
Yeah, it's all expenses. You have to continue to have a high S&M cost of your SG&A. And with low margins already, like I don't see how much juice could be squeezed.
Yeah, and they're squeezing franchise businesses, which are already set up and structured to be low margin anyway. So it's like it's a low margin business within a low margin industry, and it's like there's not that much meat on the bone. If you were addressing like a 75% plus margin business, you have room for cost adjustment and upsell, which you don't have that here. So I couldn't. I'm going to have to bring this one up because this is hot dog water. Absolute garbage. Throw it in the trash. Spit it out, and then burn it, and then step on it a little bit, and then make sure it gets to the landfill. I just passed one of these cars. It was like a perfect metaphor. At first, I thought they looked cool, right? And then I go to pass one, and I see like on the back rear bumper a shitload of damage, and then on the front bumper I see a bunch of damage. The bumper's kind of hanging off, and I was like, if that isn't Lucid's story, I don't know what better captures it. Because from a distance, it was like, wow, cool. But then you get up close and it's a mess. And yeah, I don't know. If you're gonna spend 100, what is it, 130? It was like an egregious sum to get that car. You could have bought a Porsche Taycan. You could have bought so many like best in class cars for that.
There's only two companies. It's Tesla and Rivian. Lucid will go via acquisition. Take advantage of this dead cat bounce of 30% move in a short period of time. Write this off. Hopefully this isn't your only investment. Write this off as a tax loss compared to your other gains you've hopefully experienced this year.
We'll get you those gains. Keep coming back. We'll get you those gains that'll be offset by this. Get you back to steady Eddie. And if you want to, great. But those of you that have been with us for a while, I'd love to share your experience in the chat. A lot of people watching this, they don't know who to trust or what to do. Let them know how it is. Come get some free shit, make some money, and then we'll talk. I'm looking to see if there are any more here. I think we went. We'll do a quick Rocket Lab because we absolutely crushed that. Also, that is a chart I did publish on TradingView. They banned me the first time because I put a link in there. They fixed it the second time. Beautiful move. So this was the buy that we gave you right here. You were able to buy down to 360 and change. Literally the day after we talked about it, went down to like 360, off a high of 588. Like significant move. Again, we talked about this many a times. This is I don't want to say Hail Mary because now we're up significantly. You could set a stop here at 450 and secure profit forever. I'm personally just going to move up that stop loss to like basically my entry. So it's like a net sum zero game where if anything, worst case scenario, on some of it, I don't lose anything, and then I'm willing to take a drawdown on the rest because this is a bet for the future, and I'll let Shay kind of finalize that because.
I mean, listen, the appetite for the next frontier after AI will only gain in popularity with the rate cuts because the demand for whatever the alpha is for these high beta trades, like who've been like consolidating, basing for like years, who have like their product or business has improved over the course of the years, but you couldn't tell in the stock price. So that combination is what's the opportunity on the lagging names for high quality growth. Rock Lab is one of these names. I have my cost base is around $4 in this name. It's a 3% position in my portfolio. They have a duopoly in a space economy that's hasn't even touched like what it could become. You're seeing all these headlines from SpaceX and like being worth $200 billion. Essentially, they're investing so much in a space economy that Rock Lab is just going to benefit off that as a high tide raises all boats type of situation. So yeah, right now, like they're growing top line growth 40%, I think, CAGR for the next couple of years. They're about to be profitable in 2025. First mover advantage, duopoly with SpaceX, which is worth 100 times what Rock Lab is. The list goes on, and I think they're going to start being much more aggressive in M&A once we get the first rate cut, because I think that signals to a lot of the C-suite that, all right, the worst is behind us in the rates. Like, it's only going to get better. We can be more aggressive now, use some invested capital that we want to optimize our market share or growth avenues down the line. Once that occurs, I think Rock Lab's going to acquire a lot of their competitors for pennies on the dollar, create more of that market share of the space economy that's just beginning. And it's a 10+ year story, not like 5+ years. So this is a really attractive entry point, in my opinion, if you have that kind of scope. And this is one that shows like narrative follows price action. Like once this approaches $10, people are like, oh, whoa. You can buy a $3 or $4 billion space company that's profitable right now, competing against a $200 billion SpaceX. Ton of room to move, and they get bullish. Nobody wanted to touch the stock when Austin and I were pitching it at $4, but now they're slowly warming up to it. Now they're seeing it break out. That's just how it works in this game, and this is a really interesting small cap speculative position you can be part of. Like 1% position can turn into a 10 bagger without you even worrying about losing that 1%. That kind of situation.
When you don't listen, you just get a shittier average. But when you go in and do the research, we win. So I am excited. That was a big win. So there it is. Gave you that juice. Giving you that juice every week, day in, day out. I'm going to pop that link one more time at the bottom for those of you that don't have it. Make sure you claim the role to get access. Friday is now in-house private stream where we're giving the in-depth trade alerts, the passive options trade, and our small cap pick of the week. So those of you that are in the private community will get those tasty little treats. And the rest of you get in there and get access to it like today so that you can make some money, baby. So that's it and that's all. I love y'all. Stay blessed now. Bye-bye.